Good morning, and sorry for the delay on this video as I was dealing with internet issues. We're going to be talking about the last week of the month. Here we have FOMC and a lot of good earnings this week. Let me get my, oops, that didn't work. I'm trying to rush to get this out because I should have already had it released over the weekend and I didn't. So here we go. Start out with a quote as usual. The twin killers of success are impatience and greed. I'm going to skip ahead on that. That's pretty self-explanatory. Don't get in too big of a hurry to put yourself in a situation that you don't want to be in, aka a non-A plus setup. A lot of notable earnings this week. Of course, we're catching this on Tuesday, where we've got the only real big ones today, or there really isn't. Visa. Tomorrow we've got Microsoft, Meta, and Alphabet or Google. And then we've got Apple, Amazon, and some oil on Friday. So I think the biggest day is tomorrow. We'll be looking for at close tomorrow, which I believe, which a lot of this hype is for. I don't think Master Strategy is going to cause a lot of issues for us futures, NASDAQ traders, even ES and Dow Jones, or even small caps. I don't think that's going to affect us at all. But just worth noting, I think Amazon and Apple are probably your big players on Thursday. So moving forward to economic events, which we're now hit Tuesday. If you're probably watching this now. This is probably already happening. Is consumer confidence or right before it? We have FOMC tomorrow. We kind of know for almost certain. It's not certain, but almost certain that we're going to get at least 2 more rate cuts this year, right? So October, November, December, we're going to cut 2 of the the Feds are going to cut 2 months out of the 3 remaining months, which, if we don't get it this week, then you can count on November getting it and December getting it. But either way, I think we're pricing all this bullish movement is just pricing in what we already know, which is we're cutting rates. Thursday, we have GDP and PCE prices. And Friday, we've got price index and Chicago PMI. I think that your earnings and your rate cut potential is going to be your driver of this market. I don't think that the market is really going to care a whole lot about GDP or PCE. So, and keep in mind that the government's still shut down. The only reason I'm mentioning these things are because we had the surprise CPI report last week, which everybody on this planet has said that the government being shut down, the Bureau of Labor and Statistics or whatever, that they were no longer during the time of the shutdown, they were not collecting or releasing economic data. And then we found out that, well, oops, here's CPI, and it kind of shook a lot of people up. So I'm just going to look at the chart briefly here. I don't think that there's really a whole lot to examine. We're going straight. We're just going straight up, guys. There's really no levels to really look at unless you want to take a fib and draw it. Which even now, we're right into open and we're just absolutely ripping to the upside. So I know it's hard to not get FOMO in times like this because, it's almost certain, right, that, hey, you could buy anywhere and, you're going to make some profit. At the same time, this thing could reverse at any point. You could have a tweet ruin it, you could have some news, whatever, and you can get rugged and get slammed. So it's very important to wait for setups. I personally haven't had a whole lot of time to look at anything because of my internet woes, and I've just been doing other things outside of anything that has to do with online stuff, because I mean, what else do you do when your internet's down? You know, you go outside. So yeah, I don't really have any expectations this week, especially with earnings. Tomorrow, I think that we're just bullish. If we do get any sort of pullback, I'm probably going to say that we're looking around 26K again, around in this area. I'm going to say we'll probably get it in between here, maybe. But outside of that, I think that if we close below where we had this little scoopy hand here, I think that we're going to start looking for potentially, we're going to be looking for potentially a gap fill down here, which that is, gaps are at one point or another, not always, but most of the time I've seen that these gaps do get filled. So something to keep in mind as well. I'm going to be playing extraordinarily light this week if I play at all. I kind of want this to settle down. I don't trust any of this. So if you see your setup, that's great. Go for it. Me, I'm gonna probably stay out of it and just let earnings and probably just chill with and see what kind of economic data we do get. And if we don't get it, then that's great. But I kind of just want to see a lot of this chaos kind of settle down. And another thing that we all know is that it's extraordinarily hard to trade at all-time highs, because you don't really, especially this day and age, where you don't really get a whole lot of pullback on anything. Nothing to really go by. No real areas of interest to go by. So yeah, I'm gonna probably just stay out of it. But yeah, that's pretty much it. I'm sorry this one has been kind of quick and lackluster, but you know, hey, at least I got it out. The first one's a lot better, but we were talking about the potential to move back down, and we just to move back down right before earnings and then shoot up. But I totally wasn't expecting us to gap up. You know, what was that, like 200 points? That's absolutely insane. And then we just went straight up. So yeah, so be extraordinarily careful this week. Once again, I'm stressing that I'm keeping my hands to myself for the most part, unless I see something as far as price action wise that shows that I should enter the market. But as far as that goes, I'm just probably gonna keep to myself. Anyways, have a good one.